Hello, everyone. Welcome to a Wall Street for Main Street podcast special. I'm Mo Dawoud, and today's guest, the returning guest, is Greg Mannarino from GregoryMannarino.com. Greg is the former Wall Street guy, and he also an author and a financial commentary. Greg, thank you for coming back on.
Thanks for having me. I really appreciate it.
Well, we're glad to have you back. Well, our first discussion I'd like to talk to you about is the recent unemployment number that came out last Friday. Now, anybody that paid attention and did a little digging on how they calculate the unemployment number would know that these numbers are manipulated and cooked up to show a fake recovery in the economy. And also, it shows they also calculated not including people who are looking for a job and people who are, just let's say, have an engineering degree and they get a part-time job at McDonald's. They're not included in the unemployment numbers as well. So I wanted to ask you, Greg, is it possible that unemployment will go below 5% while real unemployment will continue to go up with the way they calculate it?
Exactly. Let's make this number go to zero. They just don't count whoever they don't want to count. It's absolutely incredible. And and the more I get exposed to this, the less I actually pay attention to it, because I think people are starting to wake up to the fact that we're really in no recovery at all, and all of this is just smoke and mirrors. And it kind of strikes me as troubling that people are being disenfranchised, meaning that if you're not looking for a job, you don't matter. And you're not counted. It's really incredible, and I really hope, and I do believe that because of shows like yours, that people are becoming aware of what is really going on here. And what this is an unsustainable, absolute distortion of reality across the board. And I always say this, and I believe sincerely that people are going to get hurt because our policymakers are not leveling with the people. I would like to believe that if our policymakers actually came out and said, listen, everyone, we have a situation here, we need to deal with it, people would band together and try to do something. But they're not allowing this to happen. They're trying to keep this illusion of a recovery going, which there is none. Unemployment has not gone down. In reality, it's gone up. And it's just terrible. I don't know another way to put this other than I hope that people out there become more wise to the situation and really kind of, go into a self-sustainable mode, while at the same time trying to make more people understand what's going on.
And what's funny is if you look at the real unemployment, which is around 22, 23%, those numbers are the unemployment numbers they had back in the Great Depression.
Yes.
So having unemployment that high, you could argue that we're in a depression here in the United States.
I agree with you. And the other thing is this, and people say, hey, back in the times of the Great Depression, we had bread lines, going around blocks. Well, think about it. If there were not food stamps, people would be waiting on lines just like they did back in the Great Depression time. So people aren't seeing what's going on. It's like hidden. It's very stealthy what they're doing here. They're trying to make people believe that we're in a recovery, which we're not. We understand that they've reinflated the bubble inequities by all of this money printing and artificial manipulation of the interest rates. We got record numbers of people on food stamps and public assistance. And, the real sad thing about this whole mess that we're in right now is none of it had to happen. What the free market was trying to do, let me say this. The market was being manipulated prior to the crash of 2008 with the whole mortgage-backed securities, the nonsense that went on with, Lehman Brothers, Bear Stearns, all these companies that we're all familiar with now. And that was a setup. I mean, really it was. And more wealth was created on the short end of that trade, as you know, uh, than people can possibly imagine. And I've been doing the same thing again here. They're setting up another pump and dump here. The market's grossly overvalued. They reinflated this bubble by manipulating interest rates, and it's going to hurt a lot of people. And a lot of people, well, some on the other end of that trade are gonna make out like bandits if they just know what to do. And I think that's part of what's so important again about shows like this is allowing people to, say, hey, what is really going on, and what can I do to help myself? Because we're at a critical juncture, as you know, again, and it gets worse every day. I don't care what these artificially inflated stock prices are at this point. I'm just looking to make it work for myself and my subscribers and the people that are listening to your show here. But people need to realize those people that have no idea how money really works are going to get burned to the bone, and that's my greatest fear.
And if you imagine if they decided one day to, report the actual unemployment, what would happen to the stock market? It would probably just crash in one day.
Who knows what they would do? All I know is they're trying as hard as they can, and it's working to a certain degree. I think to keep people in the dark. I mean, I talk to people every day who believe that we are in some type of recovery. I don't get it. They don't understand that they're seeing their purchasing power getting stolen away. They're blind. They don't look on their street corner. They see that. I don't know about where you live, but here in Las Vegas, where I am, virtually every major intersection, we have people out there. It's very sad, asking for money, holding up signs, veterans. And I've been out here in Vegas now going on 4 years, and it's worse than ever. We have entire shopping plazas that are closed down. That says something. And I'm sure this is going on all over the place. Forget about what's going on over in Europe. I mean, I have friends over in Europe. I hear from them every day. And that's a whole situation that we're not being allowed to see. And just going back to what you just said, imagine if people were allowed to see what's really going on. What would they do? Well, the institutional investors, the professionals, they would just switch their strategy. They would just start shorting everything across the board, and they would fleece everyone. Either way, they're going to win. And I hate to think about that in those terms, but I believe sincerely the middle class is going to be a relic. It's going to be a something that people are going to remember in years to come. The middle class will not exist anymore. We're going back to a two-tier society, and we're watching it unfold before our very eyes, and it's very scary.
Yeah, and I live outside Washington D.C. and I don't want to say insulated, but our area has done pretty well during the after the 2008 financial crisis because this area is so dependent on government spending since we live right next to all the federal agencies and all the contractors live in this area and etc. So we're pretty much insulated, and we still have a real estate bubble going on in this area. We have shopping plaza that's being built, new condos coming up, new houses, new apartments, new luxury apartments. So I believe the day will come for this area where we'll experience some kind of hardship, unfortunately, when the deficit blows up or the or a debt bubble blows up as well.
Oh.
So I want to shift gear here and talk about the upcoming Fed meeting that's expected to end tomorrow. Now, there's a lot of talk out there that QE4 will have to happen tomorrow because Operation Twist will end this month. So what do you think, Greg? What do you think the outcome of the Fed meeting tomorrow and how that affects the stock market and the economy?
Well, there's no doubt in my mind that the Federal Reserve is going to initiate QE4. As you said, this Operation Twist is ending, this sterilized bond purchasing program, and they're going to have to print again into oblivion to buy bonds to suppress interest rates across the board. I think this is all being priced into the market. I've been saying this for weeks and weeks now, and that's why we've been seeing the market act the way that it is. They're anticipating some type of a fix with the fiscal cliff. That's being priced in. The QE4 is being priced in. And I think in many ways, we're going to start to see the buy the rumor, sell the news. Once the announcement comes, I'm very curious as to see how this is going to play out. I would not be surprised to see the market maybe drop to a certain degree. There's no doubt that it has to be done. The Federal Reserve has no choice. They've really painted themselves into a corner here. In order to keep this scheme going, they have to get into the markets, make this happen. They have to buy bonds. If they don't do that, it's over. Overnight, we will not be able to recognize our economy here. The markets will sell off rapidly, which they will anyway at one point. Why is that? Well, because all of this manipulation and this QE4, which is coming, it can't go on forever, and the market will at one point once again dictate fair market value. That day is coming.
And I agree there. And I'm hearing a number that they will do an additional $45 billion of bond purchases on top of what they did on QE3, which is, as is highly inflationary and good for people to invest in gold and silver, because that dollar is a dying currency, and one day it will hit zero.
Yeah, it's a dying currency. I talk about it all the time. The U.S. dollar is in a terminal phase. It's been in a terminal phase for a long time. China wants the world's reserve. They're sitting back. They're watching the United States make mistake after mistake. Our policymakers are either insane or there's something else going on. And I believe there's something else going on here. They cannot be that dumb to realize that what they're doing is not helping. It's creating a gargantuan bubble, the biggest that the world has ever seen. Regarding the debt, all of this printing of money gets added to the debt, and that bubble is going to burst. There is no doubt about it. It will burst. Every single economic and financial bubble has burst throughout history. There's no way to stop it from happening. They rise above a level that can be sustained by any means, and we are getting there now. That any means is the money printing that's going on right now into oblivion. And it's going to literally push us into oblivion, because when that bubble bursts, that's going to be the game changer of them all. And I've been saying this for a very, very long time. But resources will become scarce and people will die. Millions on a global scale will die when that bubble bursts.
Now, I wanted to ask you a question about the treasury market. Do you see an event in the future where the bond vigilante will show up in the treasury market and crash the market and demand higher interest rate on the bond, or that's not possible since the Federal Reserve is buying up all the debt and monetizing it?
No, it's going to happen. There's no doubt that's going to happen. The bond market is debt. It's a bubble as well. That's the scenario. And the scary thing is this is all going to happen simultaneously. The bond market is in a bubble. It's going to burst. And when that bubble bursts, it's going to force interest rates higher. Like you said, people are going to demand a higher return. And we're going to see massive pressure on the equity markets. All of that cash is going to look for a place to go, and that is going to be in commodities. All that cash is going to look for real assets. And that's why gold and silver are going to go to the moon when that happens. And that's all that's going to be is the free market deciding fair market value across the board. That event is going to happen.
Yeah, and the government and the bank can manipulate the market all they want, but at the end, the free market prevails and eventually creeps back into the economy and shows the economy that we're not in a recovery and things are going to get worse from here on out.
It really is, and it's going to be the game changer of them all. And they're trying whatever they can to do to kick this can down the road, and we're really there. We're actually at the point now where the debt is becoming so gargantuan and so overwhelming that it's stifling growth. We cannot do anything. This country cannot snap out of what we're in. It will only get worse. And they understand that, our policymakers, the investment bankers, the central banks. And that's why they're trying so hard to wallpaper this all over and make everything seem good. Because the alternative is going to be more horrible than people can imagine. And that's a fact. This will be the greatest crisis the world has ever faced. That is the bursting of the debt bond dollar bubbles, something I go over at length in my book, The Politics of Money.
And I want to talk about sound money for a few minutes in this interview. Now, there's many ways to restore confidence in a currency, and a lot of people argue to go back to the gold standard, or maybe have a basket of commodity back up the dollar. And there's a lot of people like Ron Paul that are arguing for a competing currency. I want to ask you, what would be the best solution to restore confidence in the U.S. dollar?
Well, we know that this fiat scheme is over. It's done, as far as I'm concerned, and many people. There has to be a return to sound money. That's what this is all going to lead to. I do believe that the Chinese are positioning themselves, and have been for quite a while, to have a gold-backed currency, or partially weighted currency backed by gold. Gold is the most stable asset the world has ever known. That's why it will be gold, I believe, that is backing, or partially backing, the new system. There is a new system in the works, and I don't think many people talk about it, but a new monetary system is coming. I sincerely believe that the world leaders are aware of this. The central bankers are aware of this. This is why they're stockpiling gold. They're getting ready for this transition period. And the people that are going to be taken by surprise are, unfortunately, the vast majority of the peoples of the world that are unfortunately living in a box. They're unable to see what's coming. And again, this goes back to why I believe shows like this are just so important.
And now, that's a great point. And I want to just give here and talk about what's going on in the precious metals market. Gold and silver had a okay year. I think some people were disappointed that neither metals doesn't look like they're going to hit all-time high by the end of the year, as so many people predicted. Looked like we had another consolidation year, just like 2011. And I think it was necessary. If you look at the chart, we had big, humongous gains in gold and silver, and that consolidation period was necessary to digest all the gains and take out the weak hands in the market. Now we're going into 2013, and actually going into this after the Fed meeting tomorrow and into 2013. What is your outlook for the precious metals market?
Very, very positive, very positive. And I look at it from the standpoint of what are they doing to the dollar? And the more pressure they put on the dollar, the higher all this stuff is going to go, because it's based in dollars. And I hate to sit back and actually see this happen, but it's not. Well, gold and silver have been suppressed. We understand that. And I have price targets in my book here, which are much higher than where we are right now. And I do believe as we move into the new year with this more, you see, this is my biggest fear right now, is a loss of the faith of the investor out there, and they're going to realize that this scheme cannot go on, and the confidence is going to be shaken, and that's when you're going to see the market turn over again, when you're going to see fair market value start to come back into the free market. We do not have a free market anymore. It's gone. It's been absolutely manipulated and twisted every which way since the TARP program. And it's something that cannot be sustained. So the price of gold and silver based in dollars is going to go much, much higher as we move forward. I would not be surprised to see at year end next year, and I'm just throwing numbers out there, but I'm pretty certain we can easily see $50 silver, $60 silver by the end of next year.
By the end of this year?
No, by the end of next year.
Oh, next year. Okay. All right.
I wish this year. No, not really, because that would mean the dollar would be getting slaughtered, which is going to happen. It's very, very sad. We need to keep watching the money velocity, something I've spoken about for a very, very long time, and that's going to be interesting as well. When we start seeing that money velocity kick up, they're going to spin this as a good thing, and all that means to me, and I'm sure someone like yourself understands, that people are going to be dumping those dollars while they still have some purchasing power, and all of those bills are going to come back here to the United States and cause incredible inflation, and that's why we're going to see skyrocketing prices of commodities.
I want to ask you, as an investor, how frustrating has been the past 2 years been for you in the gold and silver market? Because a lot of people have been very frustrated with gold and silver not breaking out. Some of them are questioning that the bull market is over. A lot of them are, giving up and selling and taking their cash in. Bull market or investing in general, it's very tough emotionally to control your emotions and not to give up.
It is tough. There's no doubt about that. But you have to disconnect yourself from it all. This is my take on this, and it's something I go over all the time in my blogs. We need to keep our eye on the big picture. We understand that we need to be betting against this debt. Okay, by holding positions, for example, in gold and silver, you're actually taking the short end of the trade. And it's just a matter of time before that bubble bursts. It will burst. There's no doubt about it. So you have to say, okay, you know what? Use these as opportunities to acquire more of the physical assets. If that's what you're looking to do, get away from fiat currency on a global level. This is what we need to be doing, and getting ourselves into real assets, because that's the direction we are going. So when people get frustrated, it's tough, and I can understand why, but they need to keep their eye on the future and not worry about the now. What happens in the short run does not matter, especially when we're talking about investing in gold and silver. This is a physical gold and silver. This is not a trade. If you want to trade the paper stuff, you can do that. But I'm talking about holding the physical assets. And I know a lot of people, even on my end, friends of mine, were like, oh, I thought by the end of this year it would be $50, $60 an ounce of silver. I did this, that, and the other thing. But you got to sit back and understand those days are coming, and they're not too far off. And in the meantime, people should be looking at these artificially suppressed prices as a gift, and just use this as an opportunity to add to those physical positions, and just sit back and wait and be patient, and good things will come.
Now, besides owning physical gold and silver, I also have gold, silver, both silver and gold stocks in my portfolio. I haven't heard you talk much about the silver and gold stocks in your website or in your videos. Maybe you have, I'm not sure. But what is your opinion of the gold and silver stock? Do you think investors on Main Street should look into those too, like me?
Well, yes. I've been starting over the past few months to expand my my speaking about trading and using options and stuff like that. I do believe that there are incredible opportunities that pop up here from time to time, and there's incredible opportunities. Let's put it that way, for people to get involved and try to time this market. If you're good at it, you can make an incredible amount of cash. And then I would say pull that out and put it into physical metals. Because that's really the bottom line here. Most people out there don't have the time, or maybe they don't even want to get involved in trading. I happen to love it. I think it's very challenging. I've always been into my Lord. I'm going on 25 years of doing this, and I just find it fascinating. And I like to think that I understand market dynamics. But I've studied this. It's different for me or for someone like yourself than maybe the average guy or girl who needs to be very careful. Because once you decide to get into the market, you're swimming with sharks. and they will eat you alive if you're not in the right spots at the right time if you're looking to trade. So that's why I'm more stick to telling people get away from fiat, capitalize on the debt problem, bet against the debt by holding precious metals. And I think that's the most simple, straightforward way for the non-financial person out there to not let themselves get financially destroyed as we move forward.
Now, I want to talk about the oil market, the last topic of this interview. The oil market had been in a trading range for the past year, going as high as 120 to as low to as low as 80s on the chart. Do you think this trend will continue sideways for another year or so before we see another big up move? Because I think it's in the best interest of the OPEC countries to keep the oil prices high so they can keep their oil revenue coming in, and so they can fulfill their campaign promises, like in Russia, and also in the Middle Eastern countries, they use the oil revenue to fund a lot of their social programs that they have over there. Do you think? So I'm asking, do you think the oil price will stay in this range, or will it continue to go, or will it go up soon, or will it crash?
No, I think it may stay in this range just for a little while here, but I believe that crude is black gold, and they tend to rise and fall in tandem in a lot of ways. And again, these are priced in dollars, and this is the situation that Ben is putting us all in by again putting pressure on the dollar. He's going to cause these to rise. We know that the OPEC nations have already said they want to keep crude at $100 a barrel. That's their target. We're going there, and we're going much, much higher at one particular point. Again, it's all connected to this debt, and when that bursts, the sky's the limit here. And again, it's going to be the game changer of them all. It's coming. I happen to hold relatively large positions in crude oil, and I have for a while, and I think they got nowhere to go but up because of the geopolitical situation, because of the pressure on the dollar. And I again think it's a great investment.
That's great. Well, Greg Mannarino, thank you for coming on the Wall Street from Main Street podcast. If people want to find out more about what you do, where can they go?
Probably the easiest place to find me would be Facebook. I always welcome friends to Facebook, and you can friend me. My website is actually down right now. I'm working on getting a new one. You can find me on Google. You can find me on YouTube. Just put in my name, Gregory Mannarino. You can find my books on Amazon, on Lulu. I'm not a hard guy to get in touch with.
And that's great. And you also have a book that's out as well, The Politics of Money. They can find that on Amazon. Is that correct?
That is correct, yes.
All right. Well, thank you, and hopefully you can come back soon.
I hope so. Thank you.